Good morning, Matt. Yes, my name is Mitford Mundell. I'm the CEO of Theta Gold Mines. We are an ASX-listed company, about market cap of about 100 million Aussie dollars now. And basically, we control our own gold field in the Eastern Transvaal of South Africa, with about 62,000 hectares under our mining rights. And we have a great growth story to talk about over the next 5 years.
Brilliant. Mitford, lovely to see you again. I think we saw you back in the middle of May, so keen to get an update from you. Now, the problem that you guys are suffering from is lots of promise, early days, and not a lot of delivery. Now, I know you're new, and we did talk about some of your plans and your change of plans back in May, and it might be worth just reiterating those, and then, if you don't mind, give me an update and see what have you done since May.
Yeah, look, I mean, the company has changed ownership and direction over the last 10 years a few times, and you know, from my perspective, I came in just over a year ago, and I sort of approached it, you know, with some caution as well, you know, and it was really to see what it is that you know, that we have, the fundamentals, and it was with great excitement in the end that I made the decision to join, because like investors would be looking at the promises of the past, I did the same. So we took a very practical approach, and that's really you know, it's not playing with a, you know, with the share market or anything. What's in the ground? What do we have that we can exploit? So there was 6 million ounces that everyone now knows about. It's been said over and over. As you say, the market wants to know whether we can actually extract those 6 million ounces. And that's exactly what we'll be doing. So it's understandable that there's some caution out there, and that's also reflected in the share price. That in itself now creates the opportunity for investors. So we have a pre-feasibility study that we spoke about last time. That is busy upgraded now to a definitive study, making good progress there. And added to that, and that's based on 3 mines that we will, you know, incorporate in the sort of starting project. A 4th mine is now being brought in, Rietfontein mine, which is just further south from the other 3, in the town of Sabi. And so we'll be bringing in some of those resources into the reserve as well, and we'll be probably making an announcement towards the end of the year. The definitive study will be completed first quarter of 2022, and that will enable us to then raise the actual project capital. We've secured about 10 million, just over 10 million Australian dollars of funding now to take us through this sort of bridging period. And with that money, we started now, very excited, just came back from site this week, started the drilling, doing trial mining at Frankfurt mine, and that will be representative of the mining method that we'll be utilizing over most of the mines. Very favorable ground conditions, lots of access points, and a mechanized mining method, long hole mining method that enable us to reduce dilution drastically, much safer method, and it's just you know, one of the things that allows us today to mine where the old timers, you know, couldn't, you know. So the technology is there and the economics are there. So we sit on a high grade resource. In the old days, in those mines, they, you know, as I think as everyone knows by now, these mines were started about 130 years ago. In those days, they had pay limits of 18 grams a ton and higher, and that's where they stop. So these mines are pre-developed, and we make money with our cost structure. We'll be making money at 2 grams a ton, and even less than that. Our all-in sustaining costs will be in the region of $800 an ounce. So it really makes us very robust against any gold price. This on the pre-feasibility study, the numbers at the current gold price, less than a year payback, NPV of around $100 million, a life of mine of almost 8 years, and that's just a starting project. And I think I like to talk about all the upside potential because I'm so excited about it. But I know what investors want to hear is us executing now this first phase, getting into production. So that will be the focus. Although on the side we are doing other work. We're doing actually now starting a sampling campaign at our Beta mine in the southern section. It hasn't been incorporated in the resource. You walk into that mine for kilometers, and so all we need to do is to go and sample it, and then we'll bring it into the resource. We know what the values are, but it's to make it to sort of compliant, and we'll be doing that. So there's these things that will happen on the side, and so we'll grow the resource concurrently with developing this first phase mine.
Okay, great. Thanks for the fulsome response. Let's talk about the phrase you used at the beginning. You said you want to talk about this growth story here, and you can understand, and I think you've intimated that you understand the market's reluctance to listen to you when you say that, because it's been a long journey to this point. 6 million ounces, as you say, has been bounced around the market for a long time. When we spoke last time, you talked about having changed the plan. You've come in and you've changed the plan. We were talking about open pit, and you were talking about underground, and there is a PFS. You're working towards a DFS. I mean, how are you managing that change of strategy in terms of the scoping studies? Isn't that going to slow things down?
Yeah, look, I mean, we've completed the feasibility of the open cast project. We decided to move on to the underground because the economics, as good as it was for the open cast, the economics of the underground is better. Utilizing limited capacity in terms of plant and tailings as a starting point, you'd rather feed higher grade, get more gold out. So it was a bit of a slowdown. It was a bit of a reset, but necessary. And we will be in production probably now a year later than what we would have been if we stuck with a open pit. But it's the right thing for shareholders, the right thing for the company. It's the best starting position. The open cast will come in at the right time. As we grow capacity, treatment capacity, and tailings capacity. But initially, we certainly know that this was the right decision.
Okay, so you delay things by about a year. So again, that's never a good message to put into the marketplace. But you think economically it makes the most sense for the company and therefore the shareholders. What does it say to potential funders when you get a DFS done? You're going to be having conversations with funders about coming into this project. They've seen a succession of delays and change of decision making along the way. What does that say to funders about the management's capacity to make the right decision?
Well, I can tell you that we're not waiting to speak to the funders. We're speaking to them, and they're very excited. Now, we need to be at the point for them to fund. Obviously, we don't. For the project capital and raising at the current share price, equity is not that clever. So we need to do this upfront work to get to a position where we can enable the funders to project fund the project and without diluting our current shareholders too much. So we are talking to them. They're very excited. They are especially happy with the change of direction in terms of management, because we, as a company, needed some sort of underground experience that is a bit lacking in the past. So it's a team of asset optimization specialists, people that's been very successful, solid track records in companies like Harmony. And that's what investors want to see. And they are seeing it, and that's why they're excited.
We're talking about local financiers, African financing here, because if it is, I've been interested in terms of structure that you potentially want. Is it just going to be a classic equity debt split, or is there something more clever there where, as you point out, raising at this price is not so clever? The share price is, it's really come off this year.
Yes, no, there are a lot of conversations happening in South Africa as well now with investors here. Some prominent investors that we're having discussions with, a lot of interest.
So prominent meaning not institutional, or prominent meaning just the big African banks?
Yeah, some we're having institutional conversations as well. So there's various sort of conversations happening. The excitement's there. It will send out a positive message, obviously, if South Africans invest in South Africa. And that we believe is going to happen.
So you're an ASX company with an African asset, with an African CEO. There have been some changes back in Australia. We've also seen a lot of admin happening back in Australia. Can we expect to see maybe coming onto the JSE or some other kind of movement? Because you're getting no love back in Australia. There's no conversation on any of the chat rooms about this project. What are you going to do about it?
Look, I mean, the conversations will obviously get better as we get into first gold. There are also sort of early gold plans that we have, that we sort of in advance discussions about, which I wouldn't talk about now. But I mean, any early gold will make the world of difference. ASX listing is a big discussion point, internally at the moment. We assessing the pros and cons of that. There's certainly more liquidity if you look at some of our peers that's the ASX listed and JSE, they're finding good liquidity on the JSE. So it's certainly something that we're considering potentially.
Okay, and there's also been, like I say, I mentioned Rob's. I think Rob's left. Was that a case of the G&A is too heavy, or he just didn't have the right skill sets, or was there a falling out? What was the rationale behind that?
No, there's no falling out. No, Rob actually moved off about a year ago already as a executive director. So he was a non-exec for about a year, and it was just a sort of a mutual decision in the end.
Okay, fine. Let's go back to this funding then. Obviously, it gets you through to does it get you through to completion of the DFS? Did you say?
Yeah. So we're doing the trial mining that we started this week now. So we started drilling 2 days ago. Very exciting. So I was there with the team on the ground, and it was quite a. I think, as I said to them as well, they're making history, and that feeds into. And we're not even using in the trial mining. We're not even using the sort of state-of-the-art machines that we're going to use in the actual mining method. We're using sort of less technologically advanced drills and so on. And already, just in the first, while we were standing there, first holes that were drilled. It is, we know the mining method is going to work, so it's more a trial of seeing hole sizes and powder factors, and to get the blasting right and so on, and that feeds into the definitive study, which we will then publish in the first quarter of next year.
Right. Okay. So, and I mean, just again, remind us of these sorts of grades that you were aiming for underground again. So it was sort of around 4 grams, wasn't it?
Yeah.
Right.
About recovery around 4.5 grams.
Right.
So 5.5 grams done in the end.
Right. And then the scale of this, and maybe just again remind. I saw the ASIC. You're talking about the ASIC of 800, but what does that profile look like? Obviously, you can optimize this thing over time. So, Maybe just run through some of the numbers and timing. So when do you expect, subject to funding happening at a reasonable lick, to start pouring gold? What's that ramp up look like? Because again, we talked last time about moving from 70,000 to 160,000, and that's going to take a bit of time.
Yes. So this first project, and as I said earlier, people like the story of saying, "Oh, we're going to 160,000 ounces per annum," but they're saying, "Okay, well, nice story. Show us the first phase." So the first phase will take us to a peak production of about 70,000 ounces per annum. The project has a life of almost 8 years. It doesn't incorporate any of the inferred resources, so it's not an optimized study from that perspective. So it's really what the numbers show basically almost a worst case of what will happen. So as I said earlier, about a year payback from start of gold production. It incorporates about 420,000 ounces out of the reserve. The IRR is about 82%, so it's really incorporating Beta Mine, Frankfurt Mine, and CDM, which is an acronym for 3 small mines next to each other. And out of these 3 mines, it's not the full resource. It's just a starting point. Now, and that I think in terms of timing, if everything works according to plan, which we believe it will, we're doing a lot of stakeholder management at the moment, talking to government. We actually have the community representative with us when we do presentations and we talk to stakeholders. They're with us. They're not a stakeholder. They're actually part of our team, because we're going to create, in the end, thousands of direct and indirect jobs. So this is very significant in that area and to that community, and therefore, our voice is being heard more loudly, where it matters. So we will get our permits next year, and we our plans is to be in full production in the beginning of 2023. Now that is excluding any sort of early gold things that hopefully we can talk about in the near future.
Okay, so look, I think there's an expectation from investors. There's some very patient investors. Some perhaps feel a little bit trapped at the moment because the growth component has not been obvious to them. There's an expectation that you will get the whole kind of EIA, the ESG, and all of that kind of social license stuff done. Their focus, and it seems to be certainly this question sent in to us, is when does this thing start showing that it can make money economically? So, what are the things that you think are the most important? Obviously, the metallurgy. I think we talked about last time. The economics you've just given us a little bit of outline on. And you talked. In terms of the return profile, it looks quite good. What are the things that you are really focused on that will make a difference between it definitely being 2023 and slipping again?
Yeah, look, the 2 biggest factors there is to get the permitting. Now, permitting in South Africa is, it's probably a little bit more complex than in many countries.
Why?
It is, the timelines a bit longer. The sort of public participation process is quite thorough. There's a lot of, it's sort of boxes to tick, but you need to tick it, with quality work. And that's our focus. We've got a very, very strong team of specialists involved in the permitting process. And we're talking proactively to the decision makers. So by the time we submit engineering design for waste management, for instance, we've already had the conversations with the decision makers where we know that they it's really then just a formality. Now, some of these things didn't happen exactly like that in the past. So being thorough in the sort of proactive work that needs to be done with the permitting, and then you follow the timeline. So the timeline's a little bit long, but we are in conversation as well with government, because the president actually, in an attempt to attract investment to mining, a year ago, he announced that they will reduce the timelines by 50%. So we are talking to government now, and they're willing. It's sometimes just a more capacity issue inside government that prevents those things from happening. But the intention is there and the support is there. So it's really, so that's the one thing: permitting, being proactive, doing it thoroughly, and then we'll get it. So we have no hesitation really about the permitting. The other thing is then obviously investment. So while the permitting process is still ongoing, we need to give investors enough for them to say, okay, they can pull the trigger for project funding, even while the permitting is not, finally concluded. But they need enough, and we believe we'll be able to give them that, plus the definitive study. So give them a definitive study that they have confidence in terms of the technical solution, the techno-economic solution. Give them comfort about the permitting, and and then we can start building.
So can I come back to an earlier question? Was I think we kind of skirted around it a bit. We got distracted, which was: is there any kind of unusual structure, i.e., like a financial structure, to what you can do with the financing, which will not dilute shareholders? Yes. Are your funders, because they're African or possibly South African, they're aware of what's going on in the country, that you can get a bigger debt package compared to the usual debt equity ratios, or some other kind of asset-based lending rather than dilutory at company level?
Yes, no, there are various potential sort of funding mechanisms that we're looking at. I mean, there's discussions about royalties. We obviously want to do the right thing for the shareholders in the end. And if the share price, and I believe showing, especially if we get into the first gold early on, which is outside of this project, that would certainly start to move the share price, and then equity raise becomes more viable again. So it depends on the time, where the share price is, but the appetite for project funding is certainly there, and we are in advanced conversations about that.